Not to say that I'm bearish on Bitcoin overall. Overall, the long term, I like it. It's just I'm a trader.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway breaks down crypto trends, Bitcoin's next big move, and what traders should really watch. Curious if a crash or rally is coming? Let's hear what he sees ahead.
Bitcoin. All right, here we are on Bitcoin, guys. Let's go to the charts here. Let's take a look. I'm going to bring up this chart here with you guys so that we can take a gander at the level. So remember where I came up with this, right? So I was studying charts and I was saying to myself, wow, so you have this trend line that goes all the way back to 2007 high, through this high, to the exact high in 2021, to the exact high in 2024 and 2025. This line is parallel to that line. Look at where we are. We're right on the underbelly. That's where I'm coming up with that 96,100-ish resistance. And to me, I probably, if it hits it over the weekend, I'll probably start a small short position on Bitcoin off of that level. And again, by the way, keep in mind, not to say that I'm bearish on Bitcoin overall. Overall, the long term, I like it. It's just I'm a trader. So I'm going to be shorting it when it tells me to short, and I'll go long when it tells me to go long. Oil today, neutral to upside here, so a little bit of a bounce to the upside. Look at that classic bear flag pattern. This is your major resistance. If we zoom out on the chart, look at this. This level was respected all the way back here. Here it was resistance, pulled back, hit, pulled back, breaks out. Then look at how many times it has hit over the last multiple years. We have finally broken and confirmed. That means 65 to 66 becomes epic resistance, and look for it to roll over here once it gets into this level. Maybe it doesn't even hit that, but for me to short it, it's got to get to that level, and then I would consider a short opportunity. Silver, let's look at silver. I know a bunch of you guys love silver. Silver, again, is not that interesting lately. It had the big dump with the markets, the big bounce, came in here, consolidated, got above and consolidated, popped, a little bit of a drop here. You know, supports here, resistance up here. It's just kind of hanging out in a range. It's range-bound trading on silver, certainly not as sexy as what gold has done of late.
It's been a year since Bitcoin's latest halving, and while the price has climbed, it hasn't delivered the fireworks many were expecting. Traditionally, Bitcoin's halving events, which cut minor rewards in half, have triggered massive rallies. This time around, though, things are different. Sure, Bitcoin has surged to around $95,000, marking a 49% gain since the April 2024 halving. But compared to previous cycles, where prices soared by hundreds or even thousands of percent, this performance looks pretty weak. Analysts point to the tough macroeconomic environment as a big reason why. Interest rates are at their highest levels in decades, making it harder for riskier assets like Bitcoin to catch fire the way they have in the past. Meanwhile, miners are feeling the pressure too. With smaller rewards and higher competition, many are struggling to stay profitable and are being forced to sell off Bitcoin just to keep their businesses running. While Bitcoin's story is far from over, this halving cycle has definitely been a tougher climb than anyone had hoped.
Oil today, 30 cents higher, basically flat. It is still forming an amazing bear flag, folks. So again, I still think it can go as high as around 65 to 66, but once there, look for that next leg down. The bear flag should start to play out. Gold today pulling back. Again, I called a top on gold. We had a beautiful blow off top, topping tail on both the daily chart, and now it looks like there'll be one on the weekly as well, right at a parallel channel crossroads. And again, that was a beautiful little trade to the downside, and I still think it's headed lower. My first support is $3,140. All right, that's first major support. It's about 150 more downside dollars on gold before it finds support there. And take a look at Bitcoin trading at 95,300. If you've been following my game plans, I've said, guys, it's going to go touch 96 or pierce 96. The high today on Bitcoin was just a hair below 96. That is going to be a major test of the chart for the bulls versus the bears. Can it get through this 96, 100 area or not? There should be resistance. I think it's going to get rejected off that level, at least in the short term, but time will tell. Flipping to the S&P 500, here it is, folks, right? So here's your daily chart. of the S&P. This was Monday's day right here. And remember what I talked about in the game plan. You had the big green candle right here. This was kind of what we would refer to as the flagpole of the flag. You then had a retrace candle the next day. The low of that candle was right there. All right. Any sort of close over here below that low, the bias would have gone quickly to bearish. But interestingly enough, right here, all we did was test that low right there. We never closed below it. The bias remained bullish based on probabilities. And remember, folks, this isn't about personal feelings or anything like that. Throw that out the window if you want to be a good investor or trader. It's all about the charts. The charts held that low. The bias remained bullish. 1 update, 2 updates, 3 updates, and 4, albeit today is a little on the smaller side. We are up on the day. The other thing that's still bullish for this market is that the high of the flagpole, if we draw a line right here, and my line's not perfectly straight, but the point being is we are just above that high. That to me remains or keeps the bias bullish into next week. Now, just because I'm bullish into next week doesn't mean that we're not going to have a down day in the mix. You can always have a down day. It's random. You figure 4 updays in a row, we might even be due for one. But we should still head higher. And the level I'm going to start to heavily accumulate shorts, starting right here at gap fill right up here around 5,700. All right, on the S&P 500. So if you're looking for a level, that is my level that I'm watching like a hawk. It coincides with this gap fill right here. And again, at that point, it would also be a key Fibonacci retrace. So again, by the way, let's keep in mind, the way I trade, I don't go all in right there and say, oh, well, this is going to be definitely the top. I dip toes in the water. If it goes a little higher, I can add. Ultimately, for me, this is a market that's now in a downtrend, and you're getting a retrace. And eventually, I think, whether we go here and fall or we go a little higher and fall, I do think, based on every chart I've looked at, and I've shown you millions of charts, it seems like, that eventually we're going to turn down and get another leg lower, easily testing this low and probably going quite a bit low.
China could be preparing a major shift in its financial strategy, moving away from U.S. Treasuries and leaning more heavily into gold and even Bitcoin. Jay Jacobs, head of thematic and active ETF at BlackRock, recently explained to CNBC that rising geopolitical tensions and global uncertainty are pushing central banks to rethink their traditional holdings. He highlighted how the freezing of $300 billion in Russian central bank assets by Western nations has sent a strong warning signal to countries like China, prompting them to diversify their reserves faster than ever. Jacobs pointed out that this pivot toward alternative assets, like gold and cryptocurrencies, actually began 3 to 4 years ago, but has accelerated sharply with today's fragmented world order. BlackRock now sees geopolitical fragmentation as a major force that will drive global markets for decades to come. This environment, he says, is fueling a strong appetite for assets that behave independently from stock markets, and Bitcoin is increasingly fitting that role alongside gold. Other analysts agree. Alex Vanevic of Nansen and experts at TCP Capital have both noted that Bitcoin is showing signs of maturing into a global safe haven asset. As Bitcoin separates from stocks and proves its resilience, it may become an even more attractive choice for countries seeking financial independence. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.